sale and leaseback transactions. A sale and leaseback transaction involves the transfer of an asset and leaseback of the same asset. First, transfer will be done. Second, leaseback. In case of sale and leaseback transactions, a seller becomes a lessee and buyer becomes a lessor. Here there are two transactions involved: sale of asset by seller lessee to buyer lessor and lease transaction. Thus, there are following two possibilities in this scenario. First, control is transferred, control is not transferred. Treatment of sale and leaseback transaction when control is transferred. In case control is transferred, transfer is treated as sale or purchase. And if the same asset which has been transferred is leased back, then the following treatment will be done. In case of seller lessee and buyer lessor, in case of seller lessee, de-recognize the asset transferred at carrying amount, that is at WDV, and recognize the ROA asset at proportionate value. Here ROA asset equals to carrying amount into present value of lease payments divided by fair value of the asset. Recognize the lease liability at present value of lease payments. Recognize gain or loss only to the extent it relates to the rights transferred to the buyer lessor. Here gain or loss will be the balancing figure. Alternatively, gain can be calculated as total gain minus total gain into present value of lease payments divided by fair value of the asset. How to calculate total gain? Fair value less carrying amount gives total gain. In case of buyer lessor, recognize the purchase of an asset and account for it in accordance with other indices based on the nature of the asset. For example, in case of PPE, Index 16 is used. For the lease, applying the lesser accounting requirements under Index 116. In case of lease, Index 116 is applicable. Next, sale and leaseback at off-market terms. There may be cases where transaction is not at market terms. That is, selling price may be more than or less than the fair value, or the lease payments are not at market rates. In such a case, an adjustment has to be made for difference between selling price and fair value, or difference between present value of contractual lease payments and present value of fair lease payments, whichever is more readily determinable. In case when sale price or present value is less, then the seller lessee recognize the difference as an increase in the sale price and increase the initial measurement of the ROI asset as a lease prepayment. Buyer lessors are required to increase the purchase price of asset and recognize the liability in the nature of advance received as lease prepayments received from the seller lessee. In case when sale price or present value is greater, then seller lessee recognizes the difference as a reduction in the sale price and recognize an additional financing received, a financial liability from the buyer lessor. A buyer lessor are required to reduce the purchase price of an asset and recognize a financial asset in the nature of additional financing provided to the seller lessee. The total annual lease payment to be made by lessee shall be bifurcated into two parts, as such lease payment are more than the market lease rent rates. First part is real lease payments per annum. Second part is repayment of excess funding by buyer lessor. Next, treatment of sale and leaseback transaction when control is not transferred. When control is not transferred, transfer is not treated as a sale. Here, Index 116 is not applicable. That is, if no sale, then do not treat it as a sale and leaseback transaction. Treat the entire transaction as a finance arrangement as per Index 109. In case of seller lessee, asset transferred will not be derecognized and proceeds received shall be recognized as a financial liability. At each year end, recognize interest expense at effective interest rate EIR and reduce the financial liability for any repayments made. In case of buyer lessor, transferred asset should not be recognized. Proceeds given shall be recognized as a financial asset. At each year end, recognize interest income at effective interest rate, that is EIR, and reduce the financial asset for any repayments received.